Hello everyone, today's topic is really important. You are going to learn preparing income statement under variable and absorption costing. Let's start our topic. The net operating income differ under these two methods due to fixed manufacturing cost. The absorption costing is also called traditional or total costing. It considers both fixed and variable cost for product costing and inventory valuation. It means cost of goods sold comprises of direct material, direct labor, variable manufacturing overheads, and fixed manufacturing overheads. Whereas the variable costing consider variable cost for product costing and inventory valuation. Cost of goods sold comprises of direct material, direct labor, and variable manufacturing overheads. The another major difference between these two methods is the presentation of income statement. Absorption costing shows cost data in conventional pattern. Cost of goods sold is deducted from sales revenue to compute gross profit, from which operating expenses are deducted to compute net operating income. Under variable costing, the contribution margin is highlighted. Let's take an example to have a better clarity about the concept. It is given that 5,000 units are produced, out of which 4,000 units are sold. Selling price per unit is $300. Manufacturing cost comprises of direct material $50 per unit, direct labor $40 per unit, variable overheads $10 per unit, and total fixed overhead cost of $5 lakh. Selling and administrative cost comprises of variable cost of $5 per unit and total fixed cost of $80,000. Let's start preparing variable costing income statement. First of all, calculate the total sales revenue. 4,000 units are sold at $300 per unit. It means total sales revenue will be $12 lakh. Next, deduct variable cost from it to compute the contribution margin. First of all, take the cost of goods sold. As I told you earlier that variable costing consider variable cost for product costing. Let's compute cost of goods sold. Direct material will be 4,000 units into $50 per unit, amounting to $2 lakh. Direct labor 4,000 units into $40 per unit, amounting to $1,60,000. Variable manufacturing overhead 4,000 unit into $10 per unit, amounting to $40,000. Total cost of goods sold will be $4 lakh. Cost of goods sold is deducted from the sales revenue, resulting in manufacturing margin of $8 lakh. Now we will deduct variable selling and administrative expenses from it to compute the contribution margin. Total variable selling and administrative expenses are 4,000 units into $5 per unit, amounting to $20,000. Contribution margin will be $7,80,000. Next, fixed costs are deducted from the contribution margin to compute the net operating income. Variable costing consider fixed manufacturing cost as period cost. It means these costs are expensed as incurred. Total fixed cost will include fixed manufacturing overhead of $5 lakh and fixed selling and administrative expenses of $80,000, amounting to $5,80,000. Net operating income will be $7,80,000 minus $5,80,000 equals to $2 lakh. Next will be absorption costing income statement. First of all, put the total sales revenue, that is $12 lakh. Now we will compute cost of goods sold. It will include direct material cost $2 lakh, direct labor cost $1,60,000, variable manufacturing overheads $40,000. Please pay attention. Total fixed manufacturing overhead costs are $5 lakh. 5,000 units are produced. Therefore, fixed manufacturing overhead cost per unit will be 5 lakh dollar divided by 5,000, that is $100 per unit. As you know, absorption costing consider both fixed and variable cost for product costing and inventory valuation. Fixed manufacturing overhead to be included in cost of goods sold will be number of units sold, that is 4,000 units, into fixed manufacturing overhead per unit, that is $100 per unit, amounting to 4 lakh dollars. Therefore, total cost of goods sold will be 8 lakh dollars. The result will be gross margin of 4 lakh dollars. Now we will deduct operating expenses from it to compute the operating income. Total operating expenses include variable selling and administrative expenses of $20,000 and fixed selling and administrative expenses of $80,000, amounting to $1 lakh. Net operating income will be $3 lakh. As you can see, operating income under variable costing is $2 lakh, while operating income under absorption costing is $3 lakh. The difference arises due to fixed manufacturing overhead cost. Out of 5,000 units, 4,000 units were sold. 1,000 unit was in ending inventory. Fixed manufacturing overhead included in ending inventory was 1,000 units into fixed manufacturing overhead per unit, that is $100 per unit, amounting to $1 lakh. Costing charge this amount as expense, whereas absorption costing carried this amount in ending inventory, due to which expenses are lower and operating income is higher under absorption costing. I hope this topic is clear to you. If you find this video useful, suggest a topic in the comment section for the next video. Thanks for watching.